getting on, guys? Luke here from LAGFX, back today with another Learn to Trade video. So this is part 2 of this 2-part series that I've been doing for breaks of structure and displacements in the market. So last week we went over breaks of structure, what it entails, what it means, how we look for breaks of structure and how we can look to trade them. Now what I'm going to go over is displacements in the market and the difference between breaks of structure and displacements in the market. So in my eyes and throughout the journey of trading Forex, a displacement in price is when price completely displaces and basically reverses to the opposite side. So for me, it would be whatever time frame you are looking originally at the the market that you're looking to trade. So say that you are, I don't know, a longer term trader, you might look at the 1 week time frame. So this example would be perfect. You are looking at the 1 week time frame. So you have your overall trend, your trend for the market, which as on screen here is bearish. And then when you go down on time frames, you would then look at the 1 day time frame. Okay, so a displacement in price for me would be to see basically the 1 week time frame to break structure to the upside. In this case, as we can see, this market is bearish. So for me, it would then be to see price go on to break a protected high and go on to set new higher highs and higher lows. That is a displacement in price. A break of structure, however, is when you look at the fractal timeframes within your trading analysis and you see fractal breaks of structure. You see the same thing that a displacement would be, but it happens fractally. So this, in my eyes, is a break of structure, and this is structure breaking to the opposite side, as it is basically putting in the footprints for the higher time frame structure and a higher time frame bias. So just as an example, if I get my brush tool here, we can see how in this phase, so it's first impulsive wave taking us lower, we have both lower highs and lower lows being produced. As we know, the highs are protected. So when we see price break above, being this one, we know that this is actually a break of structure. So from here, price breaking above, this is a break of structure because price has broken structure to the upside fractally, but it hasn't displaced price because price doesn't actually come up to break this higher time frame swing high. It actually creates a lower high, which is following the higher time frame structure. So as we've seen, price has broken structure to the upside, and now we expect that price is going to be bullish temporarily as we are following the footprint of the higher time frame structure. So we know that this shouldn't realistically last to the point where it breaks this structural high here, because we are following bearishness. So then when we see a break to the downside, so as we know in bullish structure, the lows are now protected. So when we see a break in this low, being this here, it now suggests that this phase here, which is our pullback, our retracement phase, our corrective wave within the higher time frame structure has now finished. We would then anticipate that now the next impulse is ready to take place, that being a bearish impulsive wave. So we can expect lower highs and lower lows to be produced. So we have a break of structure here, breaking structure to the upside as it's following the higher time frame structure. A break of structure here, again, as it is following the higher time frame structure. It is literally just putting in the footprints that it needs to in order to follow structural laws for the extreme high, which is the 1 week time frame. Again, we have a break of structure here, as this high comes higher than this one, and we were following bearish structure at this point. We start setting those higher lows and higher highs, and then yet again we break structure to the downside to take part in its final impulsive wave that I have drawn out here, as this is a lower low compared to this one. So that obviously suggests further bearishness moving forward. So just going back to my point, in my eyes and the way that I've traded for the past 6 years, a break of structure is something that will happen fractally, as it is putting in those footprints to ensure that the higher time frame structure is following the laws and is following that actual structural trend. And a displacement in price is when price completely displaces itself on the overall structure that you are looking at when trading and shows signs of reversing via, you know, a higher time frame break of structure or a break of structure from that specific time frame. So in this bearish example, a displacement in price would come after this protected high has been broken. So for price to come up and actually break above, that in my eyes would be a displacement in price, as price has completely displaced this entire bearish structure. That would then suggest a higher time frame reversal, and we can then expect price to continue in that direction moving forward. Now, if price was to just come to here, let's say, that would be a break of structure. If price was to come to here, that would be a break of structure, because yes, we are breaking these highs here, but we have not broken the extreme swing high from this higher time frame structure. So until price has actually surpassed this point, in my eyes, it is just a break of structure, because we know price could come, say, to this point, so just below, and then go on to set a new lower low, and that would still be following bearishness. But the second that that breaks and pierces through, that's when we know that price is completely displaced and it is now ready to look to go bullish longer term. Now, what that would mean is that this entire bearish impulse has now finished, and we would then look at this point being our next target. Once that has been broken and pierced through, we would then look at this point as our next target, and so on and so forth. Now, those are the differences in my style of trading and how I like to trade, of a displacement in price and a break of structure. Some people see it in the opposite way. Some people don't see it that way at all. It just depends on how you look to trade and how you like to trade. Some people don't even look at fractal structure. Some people stick to one time frame, whereas I like to work my way down. I like to do top-down analysis on every single pair that I look to trade. And this is just because I like to get very refined entries. So, you know, small as possible with my stop losses, and then have a wider or a larger time frame take profit target. This is how we are able to have great risk to reward returns and great profitable positions. Now, you might be wondering, well, Luke, what's the importance of the difference between a break of structure and a displacement in price? Well, if we have a break of structure, for example, so let's just grab our path tool again. So say that we have a break of structure. So obviously following the 1 day time frame, so this structure here, say that we have a break of structure that takes us above to this point. We know that realistically, price could fall back, set a higher low, and then go forth to set bullish structure. But this, in fact, is our next target. Because, reason being, price could break structure to the upside. So if I just move this to the left, price could break structure like it has done here. So if we just highlight this with the brush, it could break structure like it has done. It could come down to set a higher low, start following bullish structure, but then decide to actually break structure again to the downside. And that, in the grand scheme of things, is still following bearishness throughout, which would mean two things. This impulse here that comes down, comes back up and comes down is actually just one impulse that goes from here to here. That is the impulse. So if we follow the structure again, it is actually just this. So we have a high set, a lower high, a lower low. That is the structure that's followed, because this here is just part of the impulse that is taking place. Now the retracement that comes up, yes, it comes up to this point, and then we go on to set a lower low. That is still following this fractal structure. There is nothing wrong with that, because this lower high, as I say, is actually lower than this lower high here. So it is still following the fractal bearish structure. So this is why it's important that we can differentiate the difference between a break of structure and a displacement in price. Because if we can do that, then we know longer term what price is going to do. Because in reality, price can actually come up as high as, say that this coincides with this, and that's just down here, for example. Price could come as high as this point here, and it is still following this bearish impulse that's taken us lower. And that goes for fractal structure as well. But the second that it actually displaces that and breaks this swing high, that is proof in itself that actually this higher time frame structure, so this 1 week time frame structure, has actually been displaced, and we can expect that this is now our next target to look to place our take profits when it comes to placing those buy positions. Because ideally, when we have these breaks of structure to the upside or to the downside, no matter what direction it is, we will always see price trail back to grab any remaining liquidity that's left over, or to clear any inefficiency that's being left over through this impulse that's taken us higher, before continuing the bullish structure that takes us higher. And this leads to my next point. When you see these breaks of structures take place, or these displacements in the market, don't be so quick to place positions. Wait for that pullback, because that pullback will come, because the market needs to find enough demand or supply, depending on the direction, in order to continue pushing the price in that new direction. So be patient, because price will pull back, giving you a more refined, better entry, and then that way you are able to get a better RR return and profit more so. Now, I hope that makes sense. If it doesn't, what I'm going to do now anyway is go over to the live markets. I'm going to show you an example of displacement and breaks of structure yet again, like I did in last week's episode. Hopefully it will make more sense if it doesn't now. And if you guys still have any further questions, please just leave them in the comments. I'm more than happy to answer any questions that you do have, because it is very important that we understand the structural laws that these markets provide us with, as this is where you are going to be able to get those really refined entries and profit longer term in this industry. Now, before we move over to live examples, if you have enjoyed the video so far and you are actually following through and understanding everything that I'm going through, happy days. Be sure to leave a like on the video. And if you aren't involved in the Learning Lounge group chat, be sure to get involved. Follow the link in the description. You'll find that the Learning Lounge is a great place to be when it comes to free knowledge. I also update my analysis on a daily basis, as does James, and this is a great place to be if you are wanting to broaden your knowledge and learn more about the world of Forex. Now moving to the live markets and showing you some live examples. As we can see here, we are looking at the NZD USD pair. Again, I have highlighted the structure of this market, both with the higher time frame structure and the fractal structure. So the yellow line is the 1 week structural time frame. As we can see, we have a swing high here. We have a second swing high here, which is actually lower than the previous one, as we are following bearishness. And then finally, we have what looks to be a third swing high. Obviously, this isn't confirmed, and this won't be confirmed until price has surpassed this point here, because realistically, price could in fact follow this structure coming down like it has done, and then go on to set another high, which would actually break this structural point here and displace the higher time frame structure completely, and that would be a valid displacement. So until price has either surpassed this point or surpassed this point, we don't know whether this is actually a swing high or not. So for now, what I'm going to do is just get rid of that, because it's not guaranteed. We don't know yet. So when we obviously look to trade the markets and we look at structure, it's always best to highlight the swing high and the swing low, so we know what we're working with, and we know what bracket we've got for price to travel in a direction wise. So looking here, before obviously we had this initial break, we knew that price could travel anywhere between this point and this point, as this was the swing here. So we know that price could realistically do what it wants within this area. If it surpasses this, it's a break of structure to the upside. If it surpasses this low here, it's continuing bearish structure, as we are predicting. If you don't watch our Sunday sessions videos and you don't know already, it is very important to always follow the prevail trend and trade with the trend and not against it. So obviously our bias would be to sell into this market. Now, as you'll see, I've also highlighted fractal structure within this, because I want to explain those displacements and breaks of structure again. So yes, we are following bearishness, as you can see. We have our swing highs, swing lows within this structure. That's perfect. We also have swing highs and swing lows fractally. As we can see here, we have a swing high that's set, which then actually goes on to get broken right here, we have a new high that gets set in the market. This is seen as protected in fractal structure. So this is a breakup structure. So that would then suggest further bullishness moving forward. Did we have that? Yes, we did. Prices then come up to this point, setting new bullish structure, but has it displaced? No, it hasn't. It's still following structural laws for the higher time frame structure. So until price, as I said, breaks this high here, it is still following that bearish structure. So realistically, we still want to be looking for those sell positions. Now, if price was to break this swing high, then yes, we could look for those buy positions. And that is the difference between our displacements and breaks of structure. So going to the point that I made earlier about having our brackets, our regions to work with, we have another swing. So this is our swing. So our swing high here, our swing low here. So we know that price can travel anywhere in between this point and it is still following bearishness. The second it surpasses this, as this is our swing high, it is breaking structure to the upside and we should be looking for those buy positions. Assuming it breaks this low here, it is still following the prevailer trend that we have our bias for, which is to sell into the market. So because it still hasn't displaced the market and it is still within this bracket, we should be looking for those sell positions. Again, this is the difference between breaks of structure and displacements in the market. So the second that we saw price break structure to the downside, which was here, so we had a swing low here, a fractal swing low, and then we saw price actually break that to the downside. That should then be our impulse and our confirmation to be looking for those sell positions. So what we would do, zoom in, we would wait for that fractal impulse to finish, which finishes here. We then see the correctional wave take place, which is this entire thing coming here. As we can see, it sets a lower high to this one, so it's still following that bearish structure. As soon as we have fractal confirmation within this, which would be a fractal break of structure somewhere within this, we would then look to be sellers in that market yet again. So we'd zoom in, now looking at the day time frame, because this is the day time frame structure. We can see we clearly have a BOS here that's taken place. Price continues bearish, setting a new lower low. Now what we can expect from this is our pullback, our correctional wave, where we can get our refined entry, which will be somewhere within this. And what we can do to find our entry is, one, use a Fibonacci retracement tool. So set our new swing high to swing low, giving us our brackets to work with. As we can see, price tapped perfectly into the 78.6 ratio, then went bearish, setting that new bearish leg lower, that new impulse. So as soon as we have price penetrate that, give us signs of rejection, confirmation candles, fractal breaks of structure within this, we would then be in on the position, placing our short position, having our stop loss set above the structural highs, our take profit at least double our stop loss. We could just set it at a swing low from previous times. As we can see, price has gone on to give us the data we want and we would have profited tenfold. Another thing we can do to find confirmation is use order blocks, places that have been left unmitigated. So finding any inefficiency in the market, any candles that have been left unmitigated. Now within this, there's probably a candle or there's probably some inefficiency within the market that had to be cleared. So you would highlight the zone, for example, let's say it was here. You would highlight the box as soon as price has penetrated that zone, shown signs of rejection, given us the confirmation we need. Again, we would be in and involved in the market and would have profited. If you want to learn more about order blocks, last buy to sell candles, last sell to buy candles, I will highlight a video now on screen that you can go and click on. Definitely recommend it. It's a very good video. It goes over everything you need to know in that field of Forex, and that in itself will help you tenfold when it comes to looking for those places of entry moving forward in your trading career. So there's a few things that I want you guys to take away from this. When you are looking at structure within the market, I want you to highlight these swing highs and swing lows, as this is giving you a bracket or a region that price can trade in, where it is classed as still following the trend. The second it breaks to the opposite direction. So for this example here, obviously this is the bracket or the region that it can trade in and it's still trading bearish. The second it surpasses this line here, we know that, right, the trend has reversed. We now need to be looking for those buy positions. We would wait for that pullback and then look to get involved. Ideally, if price is still trading within this bracket, we want to be looking for those sell positions. And we can predict and presume that price is going to continue bearish and eventually break this swing low here. Now, just quickly to go over what would happen if price did displace, what would we do, and how do we look to get involved in the market. So say that price did in fact break structure to the upside, so it came higher. This was literally just a higher low that it was setting, and then it went on to set a higher high, actually breaking structure to the upside, displacing the market entirely. We wouldn't want to get involved here in those buy positions, because eventually price is going to run out of demand, and it is going to have to come back down to grab more of that demand in order to continue pushing price higher. So you would sit on your hands and wait patiently for price to then come back down, find some sort of demand back lower before it takes its next impulse, taking us higher into the market. So you'd want to get involved here rather than here or here. This is the true importance of being patient and waiting for the right opportunity to execute. There has been many times when I've spoken to previous traders that they have, as soon as they've seen displacements in the market or breaks of structure in the market, they execute those positions. Now, yes, price will continue in that prevailer trend temporarily, but it is inevitable that price is going to pull back because it is needing to grab either more supply or demand, depending on the direction, in order to continue pushing the price in this new direction. So whatever you do, when you see displacements or breaks of structure in the market, just wait for that pullback, that correctional wave, before entering in on the market. Now, I hope this video kind of covers the difference between displacements and breaks of structure in the market, and I hope it makes sense. If you guys are still struggling, I know it can seem quite complex to those who are new to this industry and to those who are new to Forex. So if you are still struggling, please don't hesitate to drop a comment below or join the Learner Lounge group chat and drop me a message personally. I am more than happy to run anyone through this in a one-to-one session. Me and James are here to help share knowledge within this industry, and we want to be the change that this industry needs. So again, if you guys have any questions, please get in touch. I hope you guys have enjoyed this video. If you have, like I said earlier, don't forget to leave it a thumbs up. All the support that you guys provide is very much appreciated. We love doing what we do, and it is incredible to see our community and channel growing every single day. Now I'm going to end the video here. If you guys have any suggestions or anything you're unsure about, any videos that you would like me or James to create, leave them in the comments below, and we'll be sure to make them in our future Learn to Trade videos. Now, with that being said, thank you guys for watching, and we'll see you guys in the next one.